Hi everyone, welcome to Sane, where I share tips and tricks on how to become a successful trader. In today's video, I'm going to talk about one of the most important topics for beginners, trading capital. How much money do you need to start trading? How can you manage your risk and avoid losing your entire account? How can you grow your capital over time? These are some of the questions I will answer in this video, so stay tuned and don't forget to subscribe and hit the notification bell. Trading capital is the amount of money you have available to trade with. It can be your own money or borrowed money, but either way, you need to have enough capital to cover your trading costs and potential losses. Trading capital is not the same as investing capital, which is money you put aside for long-term goals like retirement or buying a house. Trading capital is money you can afford to lose without affecting your lifestyle or financial security. One of the biggest challenges for beginners is to determine how much trading capital they need to start trading. There is no definitive answer to this question, as it depends on several factors, such as your trading style and strategy. Different types of trading require different amounts of capital. For example, day trading, which involves opening and closing positions within the same day, usually requires more capital than swing trading, which involves holding positions for several days or weeks. This is because day traders need to have enough margin to trade with leverage and cover the frequent commissions and fees they incur. Swing traders, on the other hand, can trade with less leverage and pay fewer commissions and fees over time. Your market and instrument. Different markets and instruments have different liquidity, volatility, and minimum trade sizes. For example, forex trading, which involves exchanging currencies, is a highly liquid and volatile market that allows traders to trade with very small amounts of money. However, forex trading also involves high leverage and currency risk, which can magnify losses as well as profits. Stock trading, which involves buying and selling shares of companies, is a less liquid and volatile market that requires more capital to trade with. However, stock trading also offers more diversification and lower leverage than forex trading. Your risk tolerance and management. Risk tolerance is the degree of uncertainty you are willing to accept in your trading outcomes. Risk management is the process of identifying, measuring, and controlling your exposure to risk. Both are crucial for determining how much trading capital you need to start trading. As a general rule of thumb, you should never risk more than 1% to 2% of your trading account per trade one. This means that if you have a 000 account, you should not lose more than 2 per trade. This way, you can withstand a series of losses without blowing up your account. So how do you calculate how much trading capital you need to start trading? One way is to use a formula that takes into account your desired return, your expected win rate, your average reward-to-risk ratio, and your risk per trade. The formula is trading capital equals desired return / expected win rate, x average reward-to-risk ratio, x risk per trade. For example, let's say you want to make 000 per year from trading, which is about 167 per month or per day. You have a strategy that has a 50% win rate and an average reward-to-risk ratio of 2 to 1, meaning you make twice as much as you risk on average. You also follow the 1% rule and risk only 1% of your account per trade. Using the formula above, you can calculate how much trading capital you need as follows. Trading capital equals 000 / 0.5 x 2 by 0.01. Trading capital equals million. As you can see, this is a very large amount of money that most beginners don't have access to. This means that either you need to lower your expectations or find ways to increase your win rate or reward-to-risk ratio. Another way to estimate how much trading capital you need is to use a simulator or a demo account that allows you to practice trading with virtual money. This way, you can test your strategy and see how it performs in different market conditions without risking real money. You can also track your performance and see how much money you make or lose over time. This can help you adjust your strategy and goals accordingly. Trading capital is one of the most important factors for beginners to consider before they start trading. It can determine your success or failure as a trader. You need to have enough capital to cover your trading costs and potential losses, but not too much that you become overconfident or reckless. You also need to have realistic expectations and goals, and use proper risk management techniques to protect your capital. Remember, trading is not a get-rich-quick scheme, but a skill that requires patience, discipline, and practice. I hope you found this video helpful and informative. If you did, please give it a thumbs up and share it with your friends. If you have any questions or comments, please leave them below. And if you want to learn more about trading, please subscribe to my channel and check out my other videos. Thank you for watching and happy trading.